Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Hi, and welcome to StockInvest.us podcast for week 42. It's your usual host, Jim, and again about traveling and recording on a handheld device. So if the sound is not optimal, well, I'm sorry about that, but we have to give you the podcast. And in this week's podcast, I will just tell you how things went last week, what I expect for the week ahead of us. And just to mention that, last week I told you I thought Apple would end at $145. Apple ending at $144.85, so again spot on with Apple. But how will it be this week? We will look into it. More interesting is, of course, that the amazing run of Bitcoin, as we promised, it continues up. Last week I thought it might have a slight correction down since it was being that much overbought. But as I said, it could just continue to push. And where are we heading? In last week's title, I said Bitcoin heading for 75,000. Do I still mean it? We will also get back to that shortly. And Exigam in the portfolio had such a nice run last week. How will it be with this week? Well, also that we will have to get back to. And of course, there is the trading tips. How did Xcel Energy, Cardis, and GameStop do? Well, I can tell you that the Xcel Energy is up almost 6%. But we have this very one way of doing this podcast, and that's by starting with looking at the week ahead of us. As I said last week, I expected that to be a green week, and actually Nasdaq ended up 2.18%. Closing very, very close to 15,000 points at 14,897. And even though Jones did very well, up 1.58%, ending just above 35,000 points. So it was a good week last week, kind of expected. But what about this week? And then usually we have two approaches. We can look at the technical picture. We can go to our webpage, StockInvest.us. Could be any other web page as well, and just have a quick look at the chart. The chart will give us an idea of the direction. And if you look at the chart, we can see that Nasdaq is moving sideways between 14,200 and 15,400. And until one of these levels are broken, it's indicated that it will continue to move within this price range. Right now, Nasdaq is in the middle of the trend channel, roughly, as I said, under 15,000 points. We know that it will face a lot of resistance at 15,000 points. Will it be able to break it? Usually what I would try to do is look at the volume, the momentum. Is there enough momentum to push up? From last week, Nasdaq moved all the way up from 14,400 low, and the last 3 days just went straight up. Usually that indicates that it will be harder. There is this one very typical cycle, both for stocks and indexes in general, is this after 3 days up, you can expect 1 day down. If it's 5 days, you can expect 2 days down, etc. It's just a very general cycle, but it seems to hold some water. And I often use it if a stock's been going up too many days in a row. But in this case, the index, you can usually expect a slower movement for a few days. And if that happens, we can see that Nasdaq has lots of support at 14,800, 14,700, 14,600, and 14,400. So there is nothing indicating that we will have a strong fall. For that to happen, some fundamental news has to push the index down. And we will get there soon. Right now, Nasdaq is giving a buy signal from that long-term moving average, which is very good. Also, I have a buy signals from the short-term moving average. So this is a very good combination. There is still a sell signals from the relation between these two, moving averages, also referred to as crosses, either golden cross or death cross. So that still remain intact. In the very last trading day, the volume fell a little bit while the index went up. That is usually an indication that we can expect a more sideways movement. And trying to predict all of this, well, RSI is 48. It's neither high, neither low. It's moving upwards, and there is reason to believe that it should be able to push more up, indicating that we are willing to take more risk, pushing the index higher. So my best guess for the week has had looking at just the technical picture is the following scenario. Index might push today or tomorrow upwards to 15,000, should then take a slight correction downwards, could go as low as 14,600 and move sideways between 14,600 and 15,100 maybe for this week. 15,050, hard to say. If it breaks above 15,000, it can, with some good volume, it can of course go straight to 15,400. No reason why it shouldn't do that. But in general, this is what I see. I see Nasdaq moving up. Could be the first part of the trading day today, even the whole day, or even tomorrow, that it pushes upward to 15,000, maybe even break it a little bit, then falls back and could fall as far as 14,600, ending the week, in my opinion, a little less than today. So for the week ahead of us, I don't expect very much. I expect some volatility, some up and down, but that the general direction will be horizontal and that the actual change will not be that much. But very quickly, we will also look into some of the major stocks, Apple, Microsoft, and that will give us an idea if this picture correlates with these major stocks. But again, from the technical picture, what I see is more horizontal movement. And unless Nasdaq managed to break above 15,400, well, we are still in that negative scenario. But there is nothing in the chart right now indicating huge falls. I can see something called head and shoulder formation coming up. So if Nasdaq turns at 15,000, continues down, and breaks below 14,200, we will have a head and shoulder formation, which will indicate a fall to at least 12,000 points, 12,400 to be exact. We will see if that happens. This is the classic scenario that it moves upwards to the middle of the trend and turn down. We will see. We will follow it more closely. But for the week ahead of us, I don't manage from a technical perspective to see any real huge scary problems. Most likely a sideways movement where you can do some nice trading based on general volatility. And if we look at the fundamental picture, what is it that could affect the exchange? Usually we look at the treasury yield. The treasury yield that measures inflation is more or less unchanged from last week. Last week it was 1.6, now it's 1.58, so it's the same. But it was moving last week, and for a few last weeks it's been moving upwards. And I think you will see this just continues. But it will be a little volatile in the beginning, where it just jumps up, then goes down. But bit by bit, we should continue upwards. Q3 results are coming. Last week, a lot of bank published their numbers. I told you this last week. And they're doing very well, making quite good money. But that's for the banking industry. This week, we will know, I think it's today, we will have the industrial production numbers. They are a little bit more interesting because how are the actual production doing? We know there will be a shortage for Christmas time in any ways, due to logistics, there is so many pure logistic issues. Mentioned chips before, chip shortage, and there is a general logistic problems with goods flowing. So we know that everything is going to increase in prices upwards. But one thing is the increase in prices. Normally you would think, well, that's good for the producers. They will just make more. But if they don't manage to produce the same quantum, they will in fact don't make more money, maybe even less. And we know there is a huge toll on goods into production. And today's production numbers will give a slight idea how deep this is and how they are handling it. The end result is anyway that prices will continue to increase. The inflation will just continue for the next few months ahead of us. And this is the one thing, the one really bad thing when it comes to stock market and for the game is the inflation. We can do, as long as they keep pumping money into the markets, we can live with this, but at some point you get to a crashing point. Exactly when and where, we will see. Tuesday, after the close, Netflix will publish their numbers. That will tell a little bit about consumer spendings, but Netflix is doing quite good. Have a very popular show right now with the Squid Game setting all kind of new records. So I think Netflix numbers might just be okay, but they might also give an indication if users are starting, consumers are starting to save money or not. So there will be some attention to this, and of course, Netflix in general will also affect similar industries and could give some good buying opportunities if Netflix numbers are very good. That means that you can put a small bet on other similar stocks, expecting that they also will have good results. Oil, as we mentioned in the podcast, is now up $1 to $83, continuing its rally towards 100. Good thing for Norway, making tons of money, being a huge oil producer, so it's very good for Norway. For the rest of the world, it's not that good. That is increased energy prices, and it's since everything is made of oil, your computer, your laptop, absolutely everything. Well, that just indicates that there will continue to be, again, increased prices on different goods. And gold, I told you last week that I was willing to bet that gold would go up. It only went up $12, currently at 1,765. But this will just continue. Gold should, by all means, now head to 2,000, which is the target for Christmas. And as I also told before, I believe gold, by 1 year ahead of us, will be at 2,500. I think that we'll see much more money flow into these secure items as time and inflation just keeps going in the wrong direction. And that is the fundamental news. In short, there is nothing special. The one thing that could cause some concern was, of course, China shooting up a supersonic missile. I think it was this weekend. Has something to do with geopolitics. We know that Taiwan is under pressure. There are a few things, and of course there is this internal problems in US as well, and these things can of course then suddenly cause markets to be a little bit shaky. But in general, I don't see any huge things, either fundamental, so it combines a little bit with a technical picture that there is not much to expect from the week ahead of us. And as a new trader, you might ask yourself, so how does this information help me? What can I use this information for? Well, in general, if you're placing your bets, you want to evaluate your risk. So if you have this idea that the markets will be very shaky for the week ahead of us, well, why would you, for instance, go total in instead of waiting till the forecast is a little bit better? It's just many of the things that you should keep in general eye on and put into your strategy. Personally, if I expect a very volatile week, I would try to do some swing trades. If I expect a very steady week, I will adjust my risk a little bit different and my strategy a little bit different in how I trade. And if I for some reason thinks that, like I do and have done for some times, that the market are at very close to the top, I reduce my overall exposure in the market. I went totally full in the early COVID pandemic, knowing that after huge falls we would see strong gains. But as I said also in many of these podcasts, that bit by bit I am reducing my exposure. And when we get to the portfolio in the end, you will hear that I'm not adding anything new. I haven't been adding anything new for a very long time. I just keep reducing my high risk portfolio because I don't think it is the climate to be in high risk. Then, as I said, oil is doing very well. There is plenty of good money to be made in oil, and my oil portfolio is and has been the very best one for quite some time right now. But we will head into the first few analyses. And last week I told you I believe Apple would end at $145. That was only 15 cents off the target. So what about this week? Well, Apple moved just as expected. Now it's facing that huge resistance at 146, later 148. Relative strength index is coming up from a pivot bottom, moving up. The volume is following the stock. Not perfectly, but not bad either, giving a buy signal from the short-term moving average, but still a sell signal from the long-term moving average. And what worries me is the fact that there is so much resistance above. That will be a very hard nut to break. There is a fair chance it can break 146, of course, if the markets are good, and then later push to 148 and even 150. But there is nothing in the chart, and compared to Nasdaq, we can see a slight falling trend channel for Apple. So in Apple, the case is a little bit more obvious that we are heading into a worse territory. And since Apple was 156, I was very negative, saying sell, sell, sell. But last week was the first week that I increased target, that I expected actually Apple to go a little bit up. To be very correct, I just increased the target by $1 last week, from 144 in week 40 to 145 last week. But looking at the chart, I see more or less the same thing as I see in Nasdaq. There is a high chance that the stock will push upwards to 146, could go as high as 148. The absolute high that I managed to see Apple during the week is 149. In general, I think it will struggle. It will move somewhere between 146.50 and on the upside, and my guess is 142 on the downside. I don't see it manage to fall that far. And for Nasdaq to change direction, that we suddenly should go back to 150, maybe 160, it has to establish a new bottom. But there is nothing right now indicating that that bottom is coming anytime soon. So for the week ahead of us, I expect, as I said, somewhere between 142 and 146.50 is the most likely movement. Could be on a very good day up to 149 and a very bad day down to 139. But I'm not sure that will happen. I see that as the outer cases. By the end of the week, I think there is a fair chance that Apple will end below today's target. So for the week ahead of us, usually I keep it to a round number, but I think that for the week ahead of us, I will keep Apple at the target at 143.50. Meaning that I expect Apple by the end of the week to be down by roughly $1.5. Nothing dramatic, it's just what it is. Microsoft, I kept target for $290 last week, but Microsoft did much better, was up at $304 on close Friday. So Microsoft doing better, but as I said, that was the scenario. Microsoft is in general looking better than Apple. But if you look at the chart, we can see the same thing. Volume following Microsoft to some degree. Okay, volume fell last day, like Nasdaq, it fell while the stock went up. Now it is back to all-time high. It has two previous tops around $305. Will it be the third top where it turns? If you look at the relative strength index, it's 60, meaning that it can continue upwards. There is a general buy signal from long and short-term moving average. There is a buy signal from both of the averages. So technically, it holds a quite high score. And then things become a little tricky because we know if it moves above 305, it could just continue very fast and all the resistance at 305 will become support. So when it finally has a reaction down, it will most likely bounce up around 300, 305 and just continue upwards within the rising trend that it already is in, or even better. I've been doing this for years and years, and in many cases, I've been wrong. Hopefully right in most cases, but in some cases I've been wrong simply because you have to make a qualified guess. As I said, if it goes above 305, it can just push very high and continue within the rising trend. But given the fact two previous tops again at the high. There is a slight divergence in volume. Volume is not as high. It has been higher earlier, indicating that it should be able to push somewhere about 305. I would just say 307, and then it should react back. But there is so much good support below, starting at 303, 300, 297, 295, 290, 285, 280. So there is plenty of support below. So any fall should go slow. But I have this strong feeling that it will turn, given how I see the markets in general, somewhere just above today's level, and then go back to the bottom of the trend at 285. But it will not be this week. For this week, I believe that it could push, could be as high as 310, you never know. My strong stomach feeling says me somewhere around 307. Fall back, bounce a little around 300, could fall down to 297. But by the end of the week, end somewhere around 300. Then we'll just have to make a new evaluation by the week. Next week, how things will continue. But in general, we can say that Microsoft is looking way better than Apple from a technical point of view, and there is a higher chance that Microsoft will continue upwards than Apple doing. So if I were to put a bet, I'm not putting a bet right now, I would put it at Microsoft. But as I said, if I had to choose, it will be Microsoft. But in general, I think that will go down. And last week, the target was 290. I think, given all that support below, since it was doing that well this week, I don't think it will go that far. I will keep a target for 298. So that will be the Microsoft target for the week ahead of us. And then it's Tesla. And as I told you, I've been in Tesla since 560. And I told you to buy Tesla because it will go to 8 or 900. At 8 or 900, I would start thinking about getting out. And right now, I'm running something called a trailing stop loss. So when the stock finally falls, I will be out. Last week, I thought Tesla would stop somewhere around 800, face little resistance, move a little sideways. But it just pushed up at 840. And this was also a scenario that was described as highly possible. And I am actually there. I am running this trailing stop loss, and as long as Tesla continue upwards, I'm still in the stock. But when it starts to fall, I will be out, and I will not reinvest. Simply because I think there is way too much resistance at the 900 level, even 800. I was super happy about getting to 800. And now it's doing like Tesla often do, being a little bit erratic. It's overbought on the relative strength index, pushing very high on the strength index. But we know when people are very euphoric, they can push things very high, then just to collapse. And when things start to go the other way, Tesla will find very good support at 800, later 780, 760, 740, and downwards. But for the week ahead of us, it's so hard to say because as is, it can just continue upwards. But I will remain positive about the possible 900 target. I think it's very likely, and they could even go higher. As I've described a million times already, I think that somewhere around 800-900, Tesla will turn downwards. For the week ahead of us, being volume being a little high, can go a little higher, meaning that we could see Tesla push upwards to 850, 60 in early trading, maybe today, or could be all day or tomorrow. Then it should have a reaction back. And by the end of the week, the most likely scenario is that Tesla is a little bit lower than today, but not by much. For the week as such, I believe that Tesla would move somewhere between 790 and 880. So it should move quite much, be quite volatile, but end around 820. So we will keep a 820 target for Tesla. If that happens, I will be out. We will see. The trailing stop loss is there. I hope it will continue upwards a little bit. And the trailing stop loss, if you're a new follower, hasn't heard this one before, Trailing stop loss works this way. You just set a certain dollar amount or percent amount, and as the stock go up, the trailing stop loss automatically by the system I used in Ameritrade in the United States for American stocks, it just follows and it never goes lower. That will give you very, very close to the top when it turns, because things can go very fast when they first turn. The stock will be auto-sold, and I don't have to worry about that. You can just do the math for yourself. If you was in at 560, it's 840 now. You can just imagine the huge, nice profit made so far, and I don't want to see any of it lost. I'd rather get out, rethink, and reposition. That is always a possibility. And GameStop, I told you last week I thought GameStop would go at 185. I also said that I would bet personally on GameStop last week. It was one of these trading tips. And since we're talking about GameStop, we can just do that in a double. Last week, I did that. I told you I would buy GameStop in the early opening Monday, and I was able to get in at 175 because, as I told you, there was a possible upwards to 10% profit to be made in GameStop for sure, $10. And I was hunting these dollars. So, and I said in the analysis that I think GameStop would stop at 185. It ended the week at 183.28, so it was very close to that. And if we look at the GameStop chart, there is reason to believe that this week will not be very special. The reason is partially into the volume. There is hardly any volume. The stock was not going up last week on any volume. And if you don't have volume, it's very hard to give a good analysis. And right now, GameStop is, the relative strength index for GameStop is turning down from the pivot top at 49, turning down. This correlates also with the price. But with support at 180, 175, and 170, it's likely that the stock should move. I would say first part of the week, maybe even down back to 180 before pushing upwards again. But with lot resistance at 190, it's neither sure that it will be able to break 190. And originally that was the target I was setting for that trading, was to get up to 190. Buy signal, short-term moving average, sell signals from the long-term moving average. This is sell signals from the general relation between these two averages, but also GameStop is in a slight rising trend. That gives the idea that if you look longer than a week ahead, if you start to look, let's say, all the way to Christmas, there is a high chance still that GameStop will perform quite okay and move upwards to the $200 mark. And I think personally that there will be some correlation between the Netflix results and what will happen in GameStop afterwards. Has something to do with willingness for subscriptions, etc., etc. But for the week ahead of us, I think that there is overall a fair chance that GameStop will be higher than it is today. As I said, trading somewhere just below 180, and 190 is the most likely movement for the week. So a slow week, but it could go in one rush also all the way up to 200. And I think by the end of the week that GameStop will end somewhere around $189. So that will be the GameStop target for this week. Higher than last week. So in general, positive to GameStop. We will see how it will do. And that brings us to the Bitcoin. Last week I told you that I think Bitcoin will continue upwards and upwards, but that it was slightly overbought on the relative strength index, and that could give a reaction, short-term reaction down before continuing upwards. But Bitcoin did exactly as you can expect from Bitcoin. It just pushed upwards. And right now, Bitcoin is traded at roughly $62,000. Since it broke 55,000. All these levels are now support levels. But all last week, Bitcoin went on overbought relative stringed index, and sooner or later, reality will kick in. There is no way it can continue just being overbought. We have seen that it can last for some time, but there is high reason to believe that we will have a correction in Bitcoin. But this time, last time I said I thought it would go to 50, then just bounce up. The alternative was that we was pushing above 50, going straight to 60, which it did. But with a good support at 55, now it's the likely scenario that Bitcoin will just have a normal reaction downwards to 55 before continuing upwards. If you go and check the chart yourself, you can do that at StockInvest.us. Type in the ticker BTC/USD and you will see the chart, and you can see that Bitcoin is in the upper part of the trend reacting downwards. Volume got very high on Thursday, I believe it was last week, Friday. And last time this happened, volume got as high as it was now. It had a reaction downwards, not by much. It was $5,000 that time as well. High chance that it will go down. First level of support 57, later 55, and very huge, very huge between 40 and 50. So there has to be something very special for that to happen, that we will get back to 40. There is absolutely no indication. It's, as I said last week, Bitcoin is heading for $75,000. There is no reason why it shouldn't. For the week ahead, can be very volatile, you never know. I think the very low will be 50, most likely it will be 55 before pushing up. And for the next 6 days, where will it be? Will it be higher than 62,000? I think it will have a dip to 55. Of course, can't push higher, just go straight to 65,000. It's so hard to say. But the target by Friday, as I see it in the chart, should be somewhere around $58,000. So again, about Bitcoin, just positive. I think that it will go up and up. Should have a normal correction, total normal, nothing to be worried about if it happens, because it's just a matter of time before it will continue to push upwards. Even a fall down to 50 wouldn't worry me very much, because it will just be a natural reaction as long as it pushes up. Forgot to say that there is a buy signals from the short-term moving average, long-term moving average, and there is this golden cross. The relation between that buy signal, in the relation between these two, meaning that the short is above the long-term moving average. Heading to Dogecoin, and Dogecoin has not been moving as good as Bitcoin by any stretch or mean. And that goes not only for Bitcoin, but several coins have been held back by Bitcoin been doing good. There are some fundamental reasons, speculations why Bitcoin is doing so good now. But this just creates a divergence between Bitcoin and the other crypto, as Dogecoin, for instance, hasn't moved as much as Bitcoin. There is a release. There is a very huge reason to believe that it will push upwards, that it will be pulled up. Could be that some of the money goes out to Bitcoin into some of the smaller cryptos hunting for some profit. You never know. That's usually how it works. And right now, finally, Dogecoin has a buy signal from the short-term moving average, the long-term moving average. Even the relationship between these two averages is giving a buy signal. No volume indication that things should go up, but I like what I see when I look at the volume. Is following the crypto to some degree, and that also usually a security, meaning that if volume go up, we can expect also Dogecoin to continue up. And being way too optimistic for weeks, thinking that Dogecoin go up, I told you just buy when it was 20, buy because this will just go up. But my target's been way too high for weeks, never being able to reach them. And the last week was 26, ending Friday 23. Right now, traded around 24. But I will continue to be positive. I really believe that Dogecoin will move and it could be any time. So last week, the target was 26 for Dogecoin. I will increase it to 28, believing that money will flow from Bitcoin to Dogecoin. Also goes for many of these other cryptos. And in general, I like what I see. The crypto is in the lower part of a slightly rising trend, almost horizontal, but it's that lower part is not in the upper part, meaning that there is still plenty to go before it faces too much resistance. And Dogecoin doesn't have either much support or resistance. There is this classical at 22, 21, 20, 19, 18. On the upside, there is resistance 24, 25, 26, 28, 30, etc. But it's more psychological. I think there will be no real resistance before it hits 35 cents. And Dogecoin has been moving very rapidly before. Just look back to August 6, where it went straight from 18 to 34 cents. I think that things can be boiling in that direction, that we will suddenly have a huge increase before also Dogecoin take a natural reaction down. And that brings us to the end of the podcast. Is the trading tips. And last week I said I keep Excel Energy, Cardis, and would go into GameStop. Excel Cardis had a nice week, I would say, up 5.59% right now. And looking at the chart, I believe due to resistance above, that it's time to get out. I believe there will be enough momentum in the early trading today to get out at a nice price, simply because I like to reduce the risk a little bit. So for Excel Energy, I didn't close it last week, but it will be closed early trading today, is my guess, and that we will be able to net a profit around 6, maybe 6.5%. We will see. But the trade in Excel Energy is going to an end for this time. Cardis, however, is still looking very good. I kept this stock for 2 weeks, I believe, and I will continue to keep it this week. And last week, I told you that the trading tips for last week was GameStop. I was able to get it at 175. It was up in 185, but never managed to get to the target of 190. Sorry. And on Friday, ending at 183.28, up 4.43 since it was bought on Monday. But looking at the chart, and if you just listen to the analysis again of GameStop, I think there is a fair chance that GameStop will continue to push upwards. And I think that 190 limit is very plausible and possible to reach. Could be even on a rally upwards to 200. So I will remain in GameStop and I will remain in Cardis. I will not add any new stocks this week, simply because I don't expect very much for the week as such, and given the general risk. So I will only keep the two stocks, Cardis, GameStop, and I will get out of Excel Energy by the end of the day. And if you wonder, well, what about, is there any new trading tips? As I said last week, as long as I think Cardis and GameStop will continue upwards, they should be an equally good buy now as they was just last week. Especially Cardis, I think, has the potential. But we will see. And in the very end, it's the portfolio. The portfolio had a very nice week, especially Overbought were doing very good. At some point, it was traded around 1060, ending the week at 866. It's still in the portfolio. Neo, good week, ending 3771, remains in the portfolio. Petrogeo Service, more or less unchanged, ending the week at 431. Abus 404, I think that we will have a good Abus week this week. We will see. Overbought 866 had such a huge movement last week that a natural correction downwards, like happened on Friday, is more or less. And I think it's a fair chance that Overbought will continue upwards also further, but have a natural reaction. So it still remains within this high-risk portfolio. So no changes, no stocks going out. I don't see any reason to get rid of any of them. And I don't see any reason to add any more. So it will remain the same. We are getting to the very end of that portfolio before it will be closed. All positions will be closed. We'll see how things play out for the next few weeks. But in general, we have been just cutting them out at different levels. We took out autos at 94%, we took out Zoom at 62%, we took out Energy at 95% profit. So there has been some amazing runners, and some of these stocks are still in loss. But I think, as I said about NEO, I think that they will just continue to do good. There is more upside in NEO. And that was everything for today. I'm sorry about the sound quality. As I said, I'm out traveling in Norway right now doing this on handheld device. Anyway, I hope you will have a very good week, that you will be able to make some cash, some profits on your trade. Try to reduce your losses. That's the one way to really make a difference. If you're able to reduce your losses, increase your gains, you will see everything going in the right direction, and that your trading will just be better. The final advice is to try stick to some strategies, develop your own strategies, or copy someone's strategies and make it slowly, bit by bit, your own, trying to find that trading pattern that works for you. So I will see you next time. Will be week 43. Bye.